While the US is tightening, China is loosening. What's happening here? I'm going to give you all the details. This affects you and the economy that you have to deal with each and every day. My name is David Quintiri. I've been looking into this information now for well over a decade, knee deep in the trenches, and bringing out videos every single day so that you don't have to sift through hours of information. Just watch the channel. Let me show you what's happening right now with China first, and then we're going to get into the US dollar. I'm going to show you what's happening with the economy as a whole. Let's begin with this right here. China's strong data likely to mask weakening recovery. US numbers this week likely to show more economic weakness. If you look at the data itself, it's going to present you with some level of response of what's happening right now in the economy. It's strong. Hey, if I look here, it's strong. If I look over there, though, hey, it's weak. What's really going on? It depends on the set of data we use. It depends on the source as well. In this right here, what I'm going to show you is the fact that you have seen Canada, the United States, and Europe, all these other countries out there are basically in a tightening phase. They are not loose as they were prior. However, if we look at China, if you see the data, it is very clear that China is lending more money out now than before. They are stimulating in many different ways. They are the exact opposite, 180-degree difference from most other countries. And this has been happening since 2020. Why? What's happening here? Let's talk about that more here in a second. PBOC, that's the People's Bank of China, extends cash support in May after credit growth slumped. PBOC offered more policy loans versus maturities in May. Liquidity Operations sends a supportive policy signal. They are saying we want more loans. We want the real estate market to stay afloat. We do not want to have this additional crisis on top of everything after 3 years of lockdowns in this country. They have basically done what they call a net liquidity injection, essentially just saying that, hey, we are supporting the markets out there. We want to make sure that things are running smoothly. These different stimulus effects come in different methods, okay? They can use their subsidiary corporations. So indirectly, the government can be buying shares. They could do the same thing with real estate. But ultimately, it's more money, more stimulus. And we know how this financial system operates today. It isn't what it was. Like, don't study the stuff that comes out from 50 years ago and 100 years ago thinking it operates like that today. We need to know the history. I've done all that digging. But we have to understand things operate different. Now, debt is money. And the more debt they go into, that's essentially like wealth. But if it's used in a certain way, it can provide a stimulative effect. I'm not saying it's good, but that's the way it operates. So when you tighten, what do you think the effect is? Well, of course, it's a slowdown. It's an intentional slowdown, and they're trying to get inflation to come down. They got to do a lot better job, let me tell you, but that's the intention. Now, when you see this, China and Russia are increasing their military collaboration. Japan foreign minister warns these two countries are moving together along with the BRICS nations as a whole. I've covered this over and over again. I think it's important to understand what happened in 2020. Lockdowns all around the world, everybody shut down, nobody's allowed to go out, you know the deal, okay? Well, China didn't stimulate. While all of these other countries were pouring trillions of dollars in there, China sat back and didn't do any of that because they realized at this time, whether it was intentional or not, you could argue that, but they realized that the whole world is asking for a lot of stuff. They were asking for this, hand sanitizer and the wipes and the diapers and all these things. And China's factories, logistics, and everything was going to be 100% maxed out. Domestically, they're having problems, but everyone else is having problems. But in terms of manufacturing logistics, they were busier than they've ever been in history. And so that presented them with an opportunity to basically say, we're getting stimulus, but it's coming from overseas. So let's use this. Let's ride this wave. And that's exactly what they did. And then the whole world, as they're stimulating, they're creating all this inflation, China is benefiting from that because they're seeing it come in their way. And then the exact opposite happened. Everybody started tightening, and just around that same time, China started to loosen. And we see that data, I covered that a few days ago, where we have the China credit impulse. If you search this, I've covered it so many times before, China credit impulse. Think of that like how much stimulus China is putting into their financial system. That had been going up since, let's just say 2022, the exact reverse of when the United States started to tighten. Do you see what I'm showing you here? These two things are so very different. And if we just explain it how I'm doing here, just very simply, we're going to realize that this is really strange. When we break it down, 30,000 foot view, we look at this is odd that China is basically going in the opposite direction of everybody else. We could speculate to why, but I want to show you that this is something very distinct historically. Okay, now look at this. Gold could rally to a new record high if the US defaults and investors flee to safety. There is concern here, as they talk about in this article. Yes, the US could default. More people go into gold instantly. They are seeing the benefit of this. We don't know where to put our money. Billions and billions are pouring into the money market funds, as I've showed you, and gold is seeing the benefit of that. But also, it shows us that the concern for the currency itself is there. Okay, because if they can't pay their bills, which by the way, I don't think is actually going to happen, but if they couldn't pay their bills or decide not to pay their bills, well then this is going to be something that we will see a trend continue. The Federal Reserve, they've got a lot to say, that's for sure, but James Bullard, who has been one to say that we want the Fed funds rate at 5.4%, still has to go up from here, that's what he said. We're starting to see what they love to call disinflation. That means basically less inflation, okay? A reduction in the inflation rate, not deflation, but less inflation. Monetary policy is now at the low end of what is arguably sufficiently restrictive given current macroeconomic conditions, trying to highlight the fact that they are getting close to the end, if not the end. And this is one of the people as part of the FOMC that was saying we're not there yet. We got to raise our targets. We got to go 5.2. Then it was 5.4. All these things. So he's now saying they're at the end. So the expectation here is that this is probably it where they are. This is the end of the cycle. Maybe one more. And so this is important because as they tighten their policy, or let's say this first, if they loosen their policy, that, of course, creates a weakening of the currency. But if all other central banks are doing the same thing, it's a balance. And so right now, as they tighten, that strengthens the currency. So you as an individual, if you're earning entirely US dollar, you're buying everything in US dollar, you don't do anything internationally, you live in, let's just say, Texas, it's not as much of an effect on you as if you live, for instance, where I see the US dollar rising, I'm earning US dollar, but I'm living outside of the United States. So that affects me in one way. My income is basically higher. My customers are in the United States, I can benefit from that. But at the same time, if I've got to buy something, a commodity, that's priced in US dollars. Now, if I'm holding onto Canadian dollars, I have to buy it in US dollars, and then I lose there. So it depends on my both income and consumption patterns. So remember that anytime that we see the value where somebody might say, that doesn't affect me, it really all depends. You might be an individual, your business that you're involved in, let's just say, I don't know, you sell tires. Well, do you sell only domestically or do you sell internationally? This has an impact. It absolutely has an impact. And of course, we want international sales as well because we want to earn those other currencies too, if at all possible. Why the UK's sluggish growth rate is too much for the Bank of England. Central bank worried inflation will persist for longer. This was an interesting one. There was several charts in here around the UK. I have so many people, by the way, from the UK, as well as Australia, Canada, and other places that watch my channel. output is not expected to return to pre-2020 levels until the end of 2023. And I thought this was interesting, suggesting, by the way, that they think inflation is going to stick around for longer. Can you believe it? Britain is still lagging behind its major peers. This is the economy, just showing you the change in GDP. Not looking good, by the way, but anyway. Of course, with inflation running so hot. Just look, BOE, the Bank of England, sees inflation coming down at a slower pace. Price growth forecast to drop below 2% target in 2025 instead of 2024. We don't know where it's going to be, but just the admission of that, it starts to give you a little bit of an indication as to what's going to happen. Of course, they've got problems. There's no question about that. I want to talk more about the US dollar right now. That's key. That is central. I just spoke of it for several minutes here, but I want to touch on it as quickly as I can with this specifically. The US dollar rose to a 5-week high against its major peers on Monday as the safe haven currency benefited from inflation worries at home and growth concerns globally. Too many FOMC Fed rate cuts are priced in for the near term. You can see that investors right now believe, as I've said before, in 2023, the expectation now for the market is that there will be 0.75% worth or 75 basis points worth of rate cuts in 2023. That's what they're pricing in. That's literally where the market is sitting right now today. Do you think so? Do you think that they will cut interest rates potentially 3 times this year? We'll have to see. By the way, many people think September is when the first rate cut will be. I'd like to know what you think. Put it down in the comments below. Let me know what you think on that, okay? In the debt ceiling standoff, the era of big spending gives way to new focus on the deficit. So yeah. Let's print up billions and billions and billions, and even in some cases trillions of dollars, and then we're going to worry about our deficit. And really what we mean by that is we are going to not deal with it, and too bad for all of those taxpayers. Okay, and then by the way, the portion of the whole, the debt ceiling standoff and everything, they are not going to touch the Inflation Reduction Act. So that thing that's going to make inflation much higher, the Inflation Reduction Act, when you actually look at what's happening, they're not going to touch that. So there's going to be this stalemate and this standoff, and oh my goodness gracious, that's what you got to deal with. Janet Yellen, I thought this was funny. My favorite, Janet Yellen, to discuss the impasse over raising the government debt ceiling with board members, check this out, of the Bank Policy Institute lobby group next week. Think about this, okay? This includes I just can't, I honestly, when I read this, you got to see this, okay? The chief executives of JP Morgan, Jamie Dimon, okay, Citigroup, okay, and others. You're talking about Citigroup and JP Morgan. They're lobbying for what should happen here. That's like having the CEO of Marlboro or, the head of the, El Chapo is going to decide the laws for, what's happening with the border or maybe some drug policies, like some anti-drug policies or, whatever, this type of thing. Does that compute? It doesn't for me, unless of course there was complete corruption. You don't get the bankers who are responsible for all the problems to decide what the laws are going to be, to decide what the frameworks are going to be. I mean, you're crazy if you believe that and if you understand that. And if you start to realize that the government is there not to help you, and it's not this government, it's not the previous government, it's not the future government. They are all there. Shouldn't even go there. Let's just move on. Japan, April wholesale prices rise 5.8%, but the pace slows for the 4th straight month. Look at this. Inflation is everywhere, even in Japan. But of course, they're not going to touch their policies at all. Okay, And that's really what this is all about. You could see the future of the US dollar and how that affects inflation and how that affects you as well. I think I made it pretty clear in this video, and I hope you do appreciate it. I want you to look at this information very clearly and how this impacts you as the individual. If you appreciate this information, hit that thumbs up button, and I'll see you tomorrow. Take care.